In the news this week, the Republican National Convention. Higher mortgage rates continue to frustrate the housing market, and a leading economic indicator fell to its lowest level in more than 4 years. Let's dive in. Before we begin, remember to like this video and subscribe for more economic updates. Overall, this year's Republican convention received rave reviews, with even CNN political commentator and former Obama advisor Van Jones marveling at the enthusiasm surrounding the event, saying, "The last time I was at a convention like this was Obama 2008. There's something happening." The preceding days also brought with them plenty of economic numbers for analysts and policymakers to consider as speculation grows that we may soon see the nation's first interest rate cut in more than 4 years. On Tuesday, the National Association of Home Builders revealed that its housing market index for July came in at 42, 1 point below where it landed in June, and also a point lower than economists' projections. It is, in fact, the lowest reading for the index so far this year. In a statement, the NAHB attributed the continued pessimism among builders to persistently high rates for mortgages, construction loans, and development loans. Then on Wednesday, the Census Bureau reported that while housing starts overall increased in June on the strength of a rise in multifamily construction, single-family construction fell to its lowest level in 8 months. Overall housing starts rose 3% in June to a seasonally adjusted annual rate of 1.35 million, about 40,000 more than the 1.31 million rate that had been projected. But construction of single-family homes declined for the 4th straight month in June, the lowest level since last October. The Census Bureau also checked in this week with better-than-expected figures for retail sales in June. The Bureau reported that sales last month were unchanged from May. Economists had expected to see that spending fell by 1/10 of a point. Excluding auto sales, retail sales rose 0.4 of a point, outperforming the 0.2 increase projected by economists. Not only were sales stronger than expected all the way around last month, but the spending rate for May was revised upward to an increase of 0.3 of a point from the 0.1 of a point gain originally reported. Analysts say the surprising resilience evident in retail sales numbers doesn't change expectations of a rate cut in September, with policymakers focused principally on declining inflation numbers. Finally this week, the Conference Board reported that its leading economic index fell in June for the 26th time in the last 27 months, dropping 0.2 of a percentage point. At a measure of 101.1, the index now is at its lowest level since April 2020. Observers did find some silver linings in the report, noting, among other things, that the June result is the index's smallest decline in the past 4 months. However, in a statement, the board said that it still expects GDP growth in the third quarter to fall to around 1% annualized. That's all for now. Be sure to check back with us on Monday when we continue to inform you about what's happening in the economy. This is Devlyn Steele for Augusta Precious Metals signing out.